Hi guys, welcome back to another YouTube video. My name is Jack. Before I get into this YouTube video, I'll leave a link in the description to the Discord. Check it out, it's free guys. And yeah, let's get into it. So this video is going to be about changing the state of delivery, CSD, CISD, whatever you want to call it. It's the same concepts, different names honestly. That's the thing within trading. There's so many concepts with the same name, with different names, sorry. So let's get into the video. So what is a change in the state of delivery? Well, you first have to understand if you are bullish, you are creating higher highs and higher lows. So this is bullish price action because we create higher highs and higher lows. Higher high, higher low, higher high, higher low. This is a bullish order flow. This is bullish order flow, okay? Bearish order flow is lower lows and lower highs. Okay? We have a lower high, lower low, lower high, lower low, lower high, lower low, and so forth. So when this happens in the market, which happens, this is just the nature of the market, how do you identify when this can change? For example, in the bullish example, how can you identify when this will change to bearish? Well, the first sign we'll probably get, and this is where changing the state delivery happens, you will have a higher time frame, POI here. So you've marked out a higher time frame, POI. When price enters this higher time frame POI, this could be a bearish in a bullish example. Let's say there is a bearish FEG, there is buy side liquidity, there's just liquidity, so you're expecting price to potentially react from this price level. So when price reaches that level, you would want to see, for a change in state of delivery, price to come down and break this low and close obviously below it. This would be a bearish CSD, so this would probably be a confirmation that we are changing to bearish order flow, and if this is respected and it is valid, price will likely come back up into this now created bearish order block and continue now lower, where it would look to take, where it would look to now take these lows, which is resting liquidity. So these could be like targets and so forth. So I hope that makes sense. And it's the same for bearish, it's just the opposite way around. So what it would be is price hits your, higher time frame level. And then from that higher time frame level, price closes above this, CSD, taps back into it, order block, and we go higher. Now, if you notice something, and if you're in my Discord, you'll know I trade on the unicorn model. Changing the state of delivery, this is literally what a unicorn model looks like. Creates a lower low, we then have a breaker block, and if you had an FEG aligned, that would be a unicorn setup. Okay, so with that in mind, let's get to the charts, which we're on, and let's go look at an example. So I'm at, it's Saturday today, so this is Friday's price action. So I'm going to go to the 1 hour, because 1 hour is what we get our higher time frame narrative. I'm going to zoom out, and what can I see here? We have, and you can say this is hindsight, but I'm just doing this for today's lesson, and I hope just so you guys can understand. If I put this imbalance thing on here, it doesn't show these, but these are all imbalances here. If we go to the 4 hour, what do we have? What we have here is a bearish 4 hour FEG. We also are in one currently now here. So if I was to mark out this 4 hour FEG, as a POI, let's say they go down to the 1 hour, it's also a NFEG, like this whole area could be classed as a higher time for POI. 15 minutes, zoom out, we have what seems to be a swing high just about there, which price actually came to that level to take, And then on the 15 minute, what I can see, price taps this higher time frame POI. Let's call this higher time frame POI. Turn off in the New York session. I will turn off the session indicators. So where would your change in the state of delivery be? Your change in the state of delivery, in this case, when you're looking for a change in the state of delivery, you have to ignore the wicks. Do not care about the wicks. The wicks do the story. The wicks do the damage, but the bodies tell the story. So this higher time frame POI, as you can see here, we have a swing high, swing low, swing high. Price then moves down, comes up a little bit, but continues further down. We would want to see a candle close below this low, or at this level, to confirm a change in the state of delivery. This is a bearish CSD here. This is now a order block because we've closed below the body. And then what a market structure shift, the low that took a important level like this gets closed below. This is our market structure shift. So this shows a shift in the market structure. And now the CSD is an order block and we closed here. What can I expect price to do? I can expect price to come down, close below it, and tap back into it. We get multiple taps into this, and then price goes lower. Now it's not always going to be this clean. Price can sometimes potentially come down. It can come up here before moving down lower. But it's the concept of understanding this, because what you can do now, when you have a CSD like this, and you have this marked out, and I'll go down to when the CSD happens. So we get a CSD here. I'll go to the next 15-minute candle. We can then go into the 1 minute time frame. Of course, this is outside of the New York session, so I wouldn't hunt for anything. But I'm trying to look if I can show you guys an example. Go to the 15-minute. So if I was looking for a bearish setup, what would I want? I'd actually probably want to wait for this next 15 minutes close. So now I have a POI, so I have a bearish fair value gap here. Sorry guys, I've got hay fever for 1 minute. Okay, so I'd now go down to the 1 minute. So we create a fair value gap actually here. So this is when the 15-minute, at this candle, if I go back, I can do 2 minutes. Okay, 1 more minute. So at this point, this whole move hasn't happened, but we've created a bearish fair value gap here at this time. This just shows you the whole 15-minute candle. So when this 15-minute closes at 12:30, I then have a fair value gap. So what would I want to see for a unicorn model? Well, we have a stop hunt that is created here. I'd then want to see the lowest down close candle where the breaker block would be, which is here. This is our breaker block. I'd want to see price go this place below this breaker block. That's displacement, and leave a fair value gap. Do we get a fair value gap? We don't. So there's no fair value gap within. Oh, I'm on the 1 minute. Yeah, I'm on the 1 minute. We have no fair value gap here. Potentially on the 5 minute we have a setup. Okay, so it is potential that you could say this is a bearish unicorn model here. Yep, that is, and then you get just about taps the breaker and displaces down. But I don't know what that high time frame POI would be. Yeah, there you go. So it's in the bear. Yeah, so that could be an example. But anyway, I'm going to show you the 1 minute. So this would not be valid for me because there was no FEG in this breaker, but if you were to now take this, target 2R, see what happens. 2R gets ran, so either way I'd cancel my limit order, but we can still see what happens. Okay, you wouldn't have got tapped there by a tick. You're in it, the trade now, and yeah, you would have got taken out. So this was not a valid breaker block because there was no fair value gap aligned, so that's why I wouldn't have taken it. That 5-minute breaker block though, that was here. That did also have a fair value gap aligned with it. That's your stop hunt. If you did take this, that's too big of a stop for me. I just don't like that. You would have not got 2R yet. You can see how price is kind of going up. And then you got your 2R. So that's me showing like a unicorn model and a change in the state of delivery, how you can use them both to kind of form out a setup. I hope I haven't gotten too off track. I'll do another change of state delivery example so we can. It's a bit difficult when I'm just doing it kind of in hindsight. So if we go to the 1 hour, sorry, we can look at a bearish order flow and why this probably reversed. So going out, we have sell side liquidity here. If we also go out on the 4 hour, what do we have? We have price taps a 4 hour FEG as well. So if I mark this as sell side liquidity, I'll just delete one of these because they're basically the same level, and I can mark this out as a bullish 4 hour for value gap. So we've got two higher time frame POIs. We can go to the 15-minute. Obviously you have all of this mess here, but the higher time frame I've already marked up here. So what would I want to see price do? Well, I want it to hit this higher time frame, and I want it to then for it to be a CSD. In this, once it hits this price level here, a change in the state of delivery would have to be a close above here. We obviously don't get that, so price kind of rallies up a little bit, comes back down. This isn't just like I want to see displacement through my CSD where I would have it marked out. We don't get it, and then price now retraces back down. We still didn't close above this high because this is the high that entered the low here. All of this is just a retracement. It's a pullback into obviously this fair value gap. So I wouldn't be interested in this. And I'm using the 15-minute because I like to get the 1-minute entries. The 15 minutes lovely to kind of see change of state deliveries on a lower time frame, if that makes sense. But yeah, we get this push down here. So what I would want to see for a change in the state of delivery, I would now want to see high, high, low, high, lower low. So where would I want to see, just have a mental think, where would I want to have my change in state delivery? Where would you think it would be? For a bullish example, my change in state delivery would have to be close above that up closed candle. When it's a, down closed candle. When it's a bullish CSC, it is the highest down closed candle, the body that you want to mark out, and if it's bearish, it's the lowest down closed candle, the bottom of it. Okay. So at this moment here, this is where we get a change in the state of delivery. And also, guys, actually forgot to mention this, it's really easy to see this on the line chart if you switch to the line chart. See how this 4 hour higher time frame POI gets hit? swing low, swing high. That is when we get a change in state of delivery. We go from making a high, a lower low, higher low, lower low, to now a higher high. So that is a change in the state of delivery, guys. So this becomes an order block. You can see price comes down to it. It doesn't even actually tap into the order block. Now this is something a bit, this is extra sauce you guys can use, okay? And this is for a bullish example. This wick, I would expect this wick of the order block to be the thing that supports price higher. I don't have to expect it to come into the body. It's the wick. Use the wick for, like in this example. Even for a bearish example, it would be obviously uh, the lower wick. Oh no, sorry guys. Sorry guys. It would be here. It's this down close candle because that's, sorry, my mistake. And do you see if you mark out that candle, that wick, do you see how it comes to the CE of that wick? And now look what price does as soon as it hits it. It reverses. I did this in a trade I took this week. I marked out the wick, and that it's also useful to see if price is going to be supported at a level. So that is a bit of extra sauce. I'm not going to dive into too much into that. Maybe in another video I will. But that, guys, is that is some secret sauce there. If you join the Discord and at me, I might tell you a bit more about it. But that is some secret sauce in of itself. So price comes into that, taps into it, and we obviously get this massive push up, change in the state of delivery, and as you can see, clearly that was a valid change in the state of delivery. Look what price has done. And then obviously when we get that movement, when we over here, I'm going to assume we have a higher time frame level here. What I can do is I go to the 1 hour. What do we have? 1 hour doesn't show me anything. So I can go to the 4 hour. 4 hour, there's not really much going on there. And as you can see, this is on the higher time frame. As in hindsight, it is just a pullback before moving higher. 30-minute might have something. There's not really anything there, but as you can see, this would be then, this low here would be then a change in the state of delivery. Go from making higher highs, higher lows, change state of delivery. Do you see our price now comes to this level and it just keeps rejecting off it? And then obviously down here, we go from making a high, low, where would I want to see my change in the state of delivery? It would be this candle here, and you see break through it, kind of consolidate, tap into it, and now look, push off again. So I hope that kind of makes sense. A market structure shift, guys, in this case is going to be the high of the CSD in a bullish example would be the wick. So this would be a market structure shift. That would be a market structure shift. I think if I also put this indicator on, you guys can check this out, ITC concepts. Oh, it might actually help you guys if you are getting into learning this. It might show it. I think I need to go back to this time, for example. Okay, so fair enough. Yes, that high for me. Yeah, I guess you could say that's the actual market structure shift because that's the high of the leg down that actually took all of this liquidity. But for me, I feel that would be my market structure shift. That would probably just be my breaker structure. So yeah, I take this with a grain of salt. This order block, that actual line, the order block is there for me. That's the low of the order block. See what happens. Yeah, just see what happens. So so yeah, I hope this is the indicator. But yeah, so I hope this kind of helps you guys. Hope you learned something. And yeah, if you liked the video, please leave a like, subscribe to the channel, and I'll see you guys in the next one. Take care, bye bye.